Okay, in our Best in Class segment this week, American Express. The stock is the best performer on the Dow this year, up a whopping 90%. The company reports earnings after the bell today, and what is Wall Street looking to hear from the company? Well, Michael Taiano is analyst at Sandler O'Neill, and he joins us now live from New York. And Mike, good to see you.
Same here.
Okay, on American Express, the question I have is, even if they report these great results, I mean, the stock is up 90%. Is there much upside left for American Express?
I don't think so in the near term. I think the fundamentals need to catch up with the stock price. I mean, obviously, as you said, it's had an enormous run, much more than we've seen on the earnings. And I think in order for the stock to move materially higher from here, you either have to have the company come out with a much brighter outlook, which at this point I don't think is quite yet in the cards, or they're just going to have to really blow out the earnings expectations.
Right, a brighter outlook on the credit, on the consumer credit front, right? I mean, a brighter outlook there.
Well, not only on the credit, but on the consumer spending side as well, starting to see some signs of stabilization. So I think that's what people are looking for as well.
And from what you've heard from like MasterCard, Visa, from the banks, that's just not in the cards right now, right?
Well, it's certainly stabilizing. So in other words, the year-over-year declines are not getting worse, but they're not necessarily getting a lot better either at this point.
Okay, you said you're also going to be looking for declining loan loss provisions. Is that trend in place for American Express or just starting?
No, I mean, I think this is the first quarter where you'll start to see that happen, and that's really just based on the monthly delinquency and charge-off rate numbers that they put out. So I think we're just starting to see that credit leverage start to come into effect.
Well, so that's maybe some good news there for American Express on at least like a consumer credit front. Then, I mean, if they did see declining loan loss provisions, they've got some extra money. Do you expect that they would then put that into marketing, more marketing for their products, or are they just going to leave that for the bottom line?
Well, that's been the question, and management has said it's not yet sure whether it was going to let it flow to the bottom line. My guess is some of it will flow to the bottom line, but they'll redeploy a fairly large portion of that back into investment into the company.
Okay. Areas that Amex should be in more strongly than they're not right now, in your view?
I'm sorry, I didn't get that question.
Areas that American Express should be in, new areas, growth areas for the company that they're not in right now.
Well, I mean,
or just starting.
I think the things that they've talked about are the B2B, business to business, being an area where it's less capital intensive, less credit intensive. I think that's an area. Obviously, I think international is an area where they could pick up market share, where they have a less share relative to Visa and MasterCard.
Okay, and then when you look at MasterCard and Visa, I mean, who's going to be more cushioned if we continue to see this crisis drag on? I mean, who's going to be more cushioned in this environment?
Well, I mean, I think the issue with American Express is they're more leveraged to discretionary spending, which, right now is not a great place to be for the American consumer. So I think as more defensive names, and we don't cover Visa and MasterCard, but I think those are probably better, defensive names than American Express would be right now.
Okay, and given the run-up in the stock, that might be more of a place that you'd want to be at this point then. Okay, Michael, thanks so much for joining us. Michael Taiano at Sandler O'Neill talking about American Express, the stock up 90%.